So if you're looking 5 to 10 years down the road, yes, you buy it, Nvidia stock, but be ready for a 20% plus tank at some point. It's going to happen. I don't know what's going to cause it to happen, but it's going to happen. Remember this stupid video when it happens. Remember my stupid face.
Of course, today we are going to talk about Nvidia and the absolutely epic report that was released last night. Nvidia blew expectations completely out of the water. At the last earnings report, they said 11 billion in revenue. And of course, they underpromised and over-delivered this quarter with 13.5 billion in revenue, which is up 101% year over year and 88% just from last quarter. Gross margin is also now at 70%, which is up from 43.5% last year.
And Casey, I don't want you to miss this. What was the net income and more specifically, the net profit margin? Because this is a ridiculous number.
The net income for Nvidia was $6.188 billion. Net income profit margin was 46%. Up until this point, the highest net income margin from any big tech company is Microsoft at 42%. Nvidia, 46%. This is huge.
Of course, at this point, Casey, everybody that I think missed the Nvidia boat because it was so-called expensive in 2022, still, I think, harping on the same thing, that it's expensive. And I think we generally agree this is certainly not a cheap stock. Just how expensive is it, though? I think that's the real question we have to ask here. So maybe just a moment on guidance. As you said, 13.5 billion in revenue in Q2. The guidance at the midpoint is for 16 billion in revenue in Q3. So the company expected to hit yet another all-time high for sales next quarter. That's the quarter that will end in October. And interestingly, just bear in mind, CEO Jensen Huang and CFO Colette Kress did not provide specific guidance beyond that, but they did say that their supply will continue to increase for the rest of this year and into 2024. So that's been one of the big stories as of late, is all sorts of companies lining up, trying to get their hands on NVIDIA AI systems and just general accelerated compute hardware. There hasn't been enough of it. So supply is going to continue to increase, which seems to indicate the company is going to continue notching sequential quarter-over-quarter revenue increases well into 2024. They also alluded to that as well, that they have fantastic insight into their demand at this point well into 2024. So it looks like NVIDIA is going to continue to grow on a sequential basis, at least through next summer. That's the rough guidance. NVIDIA, we had said in some of our previous analysis, we thought maybe about upwards of 50 billion could be their revenue for this full fiscal year. And it turns out, looks like that maybe was a bit too conservative, maybe 55 billion. It appears they could haul in revenue this year. NVIDIA, certainly, as far as total sales go, pales in comparison to other big tech. Microsoft, Apple, of course, Amazon, although it has lower operating margins because of its e-commerce business. These companies do well in excess of $100 billion in revenue, but it's interesting, NVIDIA rapidly catching up. And if this sequential growth does continue through the rest of next year, calendar year 2024, maybe we're looking at a business that does maybe somewhere in the ballpark of 80 billion in revenue next year, which would reach Intel's peak revenue before it started to hit real serious decline late in 2021, which is basically the all-time peak for a semiconductor-focused business in terms of revenue. So it appears, as far as the outlook goes, and from our standpoint here, NVIDIA, not just the most valuable semiconductor company by market cap, nearly 1.2 trillion, it looks like it's also on a path to be the biggest semiconductor business in terms of overall sales as well, perhaps by next year. We'll see, but that appears to be the course that they're on at this point.
There were definitely some key takeaways from the recent earnings call and NVIDIA's newsroom. One of them was Nvidia announced a strategic partnership with VMware in their private AI foundation. Can you tell us a little bit more about that, Nick?
So these new AI systems that NVIDIA has come out with that are the starting point if you want to build some sort of AI application like ChatGPT are very expensive. And so the company has been working really hard to make sure everyone that wants it has access to it, to these high-end GPU powered systems. We've covered a number of these. I think it was just last week, Casey put together the video about the new L40 system for AI inference, about Hugging Face and DGX Cloud being integrated directly into Hugging Face, which you can think of as like the GitHub or the GitLab of AI algorithms and data sets. VMware is perhaps an order of magnitude bigger deal. VMware, not a household name, but when you think of cloud computing, virtually every cloud, be it public cloud, a public data center, or a company's own private data center that it accesses via its own internal network, probably uses some component of VMware service or architectural design in building that data center and operating that data center. So hundreds of thousands, repeat that, hundreds of thousands of VMware customers worldwide suddenly will have access to this private AI foundation, which is really important because that is the power of AI. We've been talking about this for years. If you've been following our articles, AI is going to be a custom workload problem. The public cloud boom that we saw over the last decade is not going to be the same blueprint for success the next decade in this new high performance compute workload, generative AI, whatever you want to call it. Companies have proprietary data. They do not want to share that with others in the public cloud. There's security risks with that. And so this new private AI foundation from VMware is, we think, going to be a very, very big deal.
On the last quarter's earnings call, CEO Jensen Huang mentioned a new computing era has arrived. What does that entail exactly? And how is that playing into what is happening at NVIDIA right now?
This was twofold. The first is a transition to accelerated computing, which is all NVIDIA has done historically. The GPU, the graphics processing unit, is a computing accelerator, got its start powering high-end video game graphics, but now accelerated computing being applied to everything else. And that makes perfect sense because you get more bang for your buck when you accelerate the compute over what a traditional CPU, central processing unit, a general purpose chip, can accomplish. So that's the building block of this. And then the second part of that is generative AI, which is, I'll repeat this, just one example of a new form of high performance compute. It's built on top of that accelerated computing upgrade cycle that was really already getting underway. But Jensen Huang said, now a lot of these organizations have two reasons to now upgrade their compute infrastructure. If accelerated computing wasn't enough before, now also generative AI workloads and all the capabilities that those unlock. On top of that, two reasons now for the world to upgrade.
So currently, the installed base of the entire world's data center is around $1 trillion. What is the potential for growth, the total addressable market for data center?
So this is interesting, Casey. Jensen has mentioned this at least a couple of times now in the last couple of quarters, this $1 trillion installed base, we think, and this is the total installed base of all data centers, will approach somewhere in the ballpark of 2 trillion over the next 10 years. And we think a lot of that is because more data centers are needed, and then the value of the chips going into those data centers are higher than they have been in the past. That's our basis for belief on that. What's interesting, though, is this is just the installed base. You asked about the TAM. What's the addressable market? All of that equipment in data centers gets refreshed every 3 to 5 years. All chips have a limited useful life before they need replaced. Either they're worn out or they're outdated and need an upgrade. So Jensen has also mentioned this a number of times, that what that equates to is roughly 250 billion, roughly, per year in spending on data center infrastructure. And again, that could be for the public cloud, it could be for a private network, it could be for internet infrastructure, be it one operated by like a mobile internet company or a mobile network company. It's a large addressable market, one that is getting bigger. And of course, not all of these data centers are going to use just GPUs. And of course, they're not going to use exclusively just NVIDIA's products. But we do see a path because of this TAM, maybe going from, let's say, 250 billion a year, roughly in total spend, parts plus construction, to maybe something like 350, 400 billion per year in global annual spend, maybe even higher than that. And then additionally, NVIDIA has this software component that continues to get larger as well, subscription software. We see a path for NVIDIA easily exceeding 100 billion in annualized revenue at some point in the next 3 to 5 years, primarily driven by this very large market, but of course, all the other ancillary parts as well, the PC business, the automotive business, professional visualization and such. Over the course of the next decade, we see NVIDIA being able to reach possibly 150 billion or more in annualized sales, which would put it in that ballpark we mentioned before of other big tech companies like Microsoft, Apple, Google, and Amazon.
One of the most important key takeaways from the recent earnings report is the new stock buyback plan of $25 billion. Nick, maybe you can tell us why this is such an important piece of the puzzle here with NVIDIA.
Yes, this is what we think is the most important thing you need to know about NVIDIA stock right now, which is how we lured you into this video in the first place with our title. The stock buyback of $25 billion that they just announced is obviously a big chunk of change, not the biggest share repurchase plan by any stretch of the imagination, though. Again, other big tech companies, Meta in particular, repurchased many tens of billions of dollars worth of stock in recent years. So it's not the biggest stock buyback plan, but it is significant because even at NVIDIA's current market cap, almost 1.2 trillion as of this recording, it represents 2% of the total market cap. 25 billion divided by, let's say, 1.2 trillion, just over 2% in return of cash to shareholders. It's interesting to think about this because all the talk is NVIDIA is way overpriced, way overvalued, but this is an interesting move by the company because some very intelligent people at one of the world's largest research and development enterprises thinks that their own stock is a moderately good investment right now. Maybe not the best investment. They're not going to pour every dollar of their profit into the stock in the next couple of years, but still a moderately good use of cash. I think that's a really important takeaway here. Some very smart people are thinking the stock is still an okay buy at today's levels when deciding where to allocate their own capital for the long term. They could be wrong.
But does that mean the stock is a buy now?
The big question everyone wants to know, we're not adding, but it's already our biggest position. We were adding to our position this time last year when the stock was depressed on a long-term forward-looking basis. We don't need any more. That being said, I think a lot of people are probably, maybe they don't own it or don't have a very big position in it, are now wondering if they should load up. And Casey, we preach this a lot. We think you should be cautious about chasing a stock just because the stock is running higher. Now, you may have a very, very deep understanding of a business that just so happens to have a stock that's running higher. And maybe you have some insight that leads you to continue buying anyways. But if you don't, and you're just trying to chase a hot stock, be very careful. If you absolutely must, maybe follow NVIDIA's lead and take a very small, moderate approach to this and fire up a small dollar cost average plan and just nibble little bits here and there, and then be patient. Don't chase and make this a huge position just because you're gonna miss out on returns, because this is an exciting story. In the meantime, we've provided you with a lot of video on this channel, a lot of other stock ideas that you can use as a jumping off point for you to explore other exciting businesses in this very exciting accelerated compute, generative AI market, whatever you want to call it. there are a lot of other businesses that trade for much more reasonable valuations with perhaps a little bit more insight into what's coming down the pike in the way of profitability that you can explore in the meantime.
Do you think that there will be a big pullback in Nvidia stock price anytime soon? I think you've been asked this question before in previous years. Go ahead and explain.
All right. Casey, I'm going to self-quote here, and you can provide the link to this because it's on a public transcript. But there was a live show, and the transcript published on December 10th, 2021, about a week or two within Nvidia stock's previous peak all-time high. And the same question was asked over and over again. Some people, said the stock is ridiculously overpriced, avoid it at all costs, and others were chasing and loading up on Nvidia stock at the previous all-time high. I'm just going to self-quote these couple of lines, and you can read the rest of the transcript. And I want to do it because at the time, after I logged off of the show, I thought this is probably one of the dumbest things I've ever said publicly. So if you're looking 5 to 10 years down the road, yes, you buy it, Nvidia stock, but be ready for a 20% plus tank at some point. It's going to happen. I don't know what's going to cause it to happen, but it's going to happen. Remember this stupid video when it happens. Remember my stupid face. And remember that someone on the other end is going to remember 40 million users at $1,000 a year. At the time I was talking about some new Nvidia software that had been announced. I will take those shares off your hand if you're ready to jump ship. Don't be that person and hit the sell button. Be ready for that dip and buy more when that happens. So Casey, I think the same rule applies here. Nvidia stock has had an incredible run over the last nearly 1 year. October 2022 was the bottom. It was more than a 20% tank from that quote in December 2021 to October 2022. It was more like a 70% tank. And something similar like that could happen again. And I'll say the same thing. It's going to happen again. Be ready for it. In the meantime, Nvidia still thinks its own stock is a moderately good use of cash, but take it easy. I think maybe do the same thing they're doing and be moderate with the buying if you feel like you must buy, because patience will be rewarded for a business like this. We still think it's going to grow over the next 5 to 10 years, but that growth is going to come in some wild fits and starts, just like it has in the past.
We have Palo Alto Networks and Synopsys coming up your way. Make sure you hit the subscribe button. Don't miss a video. And if you feel like it, please leave us a tip in our coffee account. We'll leave the link in our comment section. Take care, everyone. See you soon back at Chip Stock Investor.